Hi, this is Lee Gardner. 2020 is going to see a record number of people hit 55. The estimations are it's going to be around about 940,000 people that are going to become 55 in 2020. And what 55 brings with it are the new sort of rules around pensions, and most people are aware that when they get to 55 they have the option to access their pension benefits. If you've done a little bit of research, as most people have, what they become aware of is that they are able to access 25% of their fund completely and utterly tax-free. So the question we get asked on quite a regular occasion is, should I access my tax-free cash? The general rule is if you're not looking to take benefits and looking to retire, that you should stay invested. We've seen, unfortunately, people that are looking to take money from their pensions and just take it out and not have any purpose for it. They're taking it just because they can. Just because you can take the money doesn't mean you should. And taking the money out of an investment that may be grown over a 10-15 year period and put it in the building society where you're going to be lucky if the returns outperform inflation is to me is absolutely bonkers. So staying invested is really the key. Now, I do understand in the current climate of COVID where some people have seen their investments fall 10, 15, even 20% at the worst point of it. It is worrying and I can see the temptation to do it, but generally investing is for the long haul and you should stay the course if that was the plan. That said, there are some occasions where accessing the cash is something that you still might want to do. For example, you may have debts, and by taking the money from the pension and repaying the debts may be a better option than staying invested. So there are some occasions where people may want to do it, or you may well have built up enough assets that you are able to retire, and using your pension funds at this stage is the right thing to do. Obviously, you need to be mindful of a couple of things. If you take anything more than the 25% tax-free allowance, you may pay tax on any additional withdrawals, and you also will have implications over any future pension funding if you do that. The other thing that a lot of people don't realise, they assume they can just take their 25% tax-free cash out of any pension scheme that they hold. Well, you need to have the money in a flexible account, an account that lets you have drawdowns. So if your intention is just to take the cash and you don't really want to access the rest of the benefits, the money needs to sit in an account that will allow you to take advantage of these new rules and regulations. So for a lot of people it does mean moving the money. That could mean coming out of your employer scheme, which also could cause issues in the short term for you. But also, moving money, you potentially could incur costs. You could incur costs for advice. It may be that your scheme, you could also lose valuable benefits. So if it's got fixed or guaranteed income rates or guaranteed lump sums or enhanced tax-free lump sums, then you just need to be mindful of this. But that said, if your decision is, yes, I still want to access my cash, then it is something you can do yourself. You can go to companies such as Hargreaves Lansdown, transfer the money in on a sort of DIY basis, and then you have access to the money as and when you see fit, and you're totally responsible for the investment of the residual fund. Or you can go to an advisor and they will search the market. They will give you the right advice, hopefully around taxation and investment. But you will normally have to pay a fee to have this advice from a pension specialist. So again, shop around, make sure you're comfortable with who you're dealing with and that they're going to give you the right advice. At Gardner Financial Management, we offer a retirement planning service where you can work with us and we will do all the number crunching and we will take you through the whole process. So, as always, look after your money because money matters. Thank you.